Building wealth with permanent life insurance. If you have ever thought about getting life insurance, there is every chance it is because you want to leave a nest egg to your loved ones when you pass. What many people do not know, however, is that the death benefit is just one element of life insurance. It can also be a type of saving account, letting you build wealth throughout the years while you are alive. How? That's what we are here to tell you with this guide on how to build wealth with permanent life insurance. Most of us think about life insurance as something you get to protect the people you love in the event of your death. One perception of life insurance is that it's for people who have recently had kids, and while that is true to some extent, it is only one aspect of life insurance. When you factor in a permanent policy, the entire dynamic changes. It becomes something you should seriously consider if you are in 20s, 30s, 40s, or even senior. That's because it allows you to build wealth through something called cash value. What's the cash value? We will cover that in a bit. But what you need to know right now is that a permanent life insurance policy acts as a form of saving account while also growing the death benefit. As a result, it looks after you and your family both in life and after your life. How does permanent life insurance let you build wealth? With a permanent policy, you pay into two posts. With a permanent policy, you pay into two pots, the death benefit and cash value. The former grows your death benefit with each monthly payment, but it's the latter that helps you build wealth. With the cash value aspect, you can grow your wealth each month and build savings over the years. Then, when you want to tap into the money you have accumulated, you can do by withdrawing it while you are still alive. The average permanent life insurance policy allows you to grow your cash value by 6 to 8% annually. That's pretty significant compared to the standard 0.1% in a typical saving account. So you are getting more growth and even more money to play around with later in life. What does that mean for you? It means all the good news. No, but really, it's easy to underestimate how much you can save with a permanent life insurance policy. On top of that, it's a safer bet than other investment types like stocks, bonds, which can suffer from market volatility. There are also tax benefits with a permanent life insurance policy. More on that shortly. Then traditional 401ks, essentially using a perm policy as a saving account, can set you well later in life. You might want to use the money you build to pay for your kids' college, or maybe you just fancy buying a sports car you have had your eyes on. The choice is yours thanks to the money you would have built with a permanent policy. Other benefits of permanent life insurance. Some permanent life insurance is great for building wealth, which is a game changer, but it has other benefits too. It's pretty all encompassing and acts as a valuable investment when you take into account what else it's capable of. First of all, it is tax free. Whatever you save with your life insurance, you do so tax free. That's right, you do not pay a penny to the tax man. One of the ways you can access your cash value is by taking out a loan against yourself at the ratio of 0%. And because you cannot pay tax to yourself, the money assessed is entirely tax free. After you pass, the loan is repaid via the death benefit. However, because the death benefit has also grown in this time, you will still have something to leave to your loved ones. Secondly, customizable riders. You can add riders to your permanent life insurance policy. Customizing is to suit your needs. In the process, some of these riders cost extra, others are offered free. A popular rider is long-term care, which provides assistance to you later in life if you do not have family to look after you. Another option is accelerated death benefit, which allows you to tap into the resources of a policy if you fall sick or you are injured and unable to work. Thirdly, logged in premiums. A permanent policy is more expensive than the other life insurance options on the market with higher premiums, meaning you have to pay more in loud premiums. At first, this might seem like a negative, but dig a little deeper, and permanent life insurance suddenly looks like the better investment. With a perm policy, you pay the same amount of at 35 as you would 55. The premium never increases. With other life insurance options, you might pay a lower premium, but it goes up if you want to renew once the policy expires. A previous policy does not expire, so you do not have the same problem.